Welcome to Market Movers. I'm Jim Uriel with Scott Martin.
Hi, Jim.
Scott, the dollar and gold have been in focus. The dollar's been in particular focus since the Fed has pivoted to more dovish. They've rallied together. Why has that happened?
Well, I think it's the risk-off trade, Jim, and I think it's investors looking for some sort of alternative aside from the rocketing bond prices, certainly aside from the volatility that's been in equities. And let's face it, they've gotten some nice diversification from both gold and the dollar.
Can it continue?
Yes, it can, because of the fact that we're in some uncharted territory, certainly when it comes to bond yields, but I believe also when it comes to expectations for equities going forward when it comes to the trade wars and its effect on earnings.
Now, before we dive into our trade discussion, I'd like to point out that these are examples, not recommendations or advice. When I priced this out, the October gold was trading about $15.44, Scott.
Yeah, so Jim, I like looking at GC, gold especially, as an alternative asset class when you're invested in things like fixed income and equity because of that diversification, non-correlation value it can bring. However, given the run that we've seen in GC, amazing run. Yeah. There's got to be a little bit of gravity, I think, in GC. Now, I've been wrong about that, admittedly, for the last few weeks, but I'm going to try it again today as an example, specifically, Jim, looking at buying the week one SEP. 1520, 1500 put spread for 4.5 ticks. This trade risks $450 to make a potential $1550. It expires on September 6th. There's not a lot of time in this one. Maybe one you want to manage if you put it on. The underlying is 1544. Just because I believe you look at the charts, you look at RSI, you look at MACD, you look at just general linear regression, it looks like GC is a little bit overdone to the upside. I believe a put spread is a nice way to express yourself a little bit as far as a hedge to maybe equities bouncing from here.
There is zero doubt in my mind that when you look at it technically, gold is extended. It's had a Herculean run. There's no question about it. I'm not convinced that that run is over yet because I look at what's happening globally, and I'm going to ask you about that compared to other currencies in 1 second. So I'm looking at it differently. As an example, I'm buying the week one SEP, the same expiration date, September 6th, the 1560, 1580 call spread for 4.5 ticks. It risks $450 to make 1550. Mine is the mirror image of your trade, exactly. Both of them are 20-tick wide spreads. Both of them cost 4.5 ticks. You're going to tell me my direction's wrong, but do you like the expression? And consider that the reason I want to make it relatively tight spread is because it's gone so far, and that's why I want to find my risk.
And I think the expression is fine in the sense of the risk-reward. I do disagree with the direction. Mine I like just a little better because of that 1500 level on GC. I think gold just seemingly is going to pull back there and then can bounce from there and can go through your call spread as well. It's just in the near term, I think things are short-term overdone. Given this is a short expiration, I want to protect myself a little bit to the downside in GC.
Okay, back to the dollar as a relative currency. We have pivoted more toward dovish. The dollar has rallied, particularly against the euro, which has just been in the dumps. Are we worried at all if we're too dovish that the dollar is going to lose some sort of status globally?
No, I don't believe so.
What's going to replace it,
well,
right?
There's nothing to replace it, and things are pretty bad everywhere else in the globe. I mean, you think things are bad here. Look around the globe. I mean, the Brexit news, too, is probably pushing some pressure downward on the euro as well. Certainly did on the pound. So the dollar is probably safe in its druthers right now.
I like that take. Thanks for joining us on Market Movers. I'm Jim Uriel, where we are helping to make you a better trader.